The Silicon Valley Bank collapse and the issues with Credit Suisse, one of the staples in the world's banking systems, has struck fear in investors. What's next? Is the banking system going to collapse, or is this just a blip in the financial markets going forward? In this video, we discuss what do we know about the banks after this recent Silicon Valley Bank collapse and Credit Suisse bailout situation. How do we do our homework and determine what to do next in the bank stocks? How do we place an option trade in Schwab to profit in the short and the long term?
Hey guys, Darren here. Thanks for joining. We talk about action steps you can take today to increase profits and reduce risk in your options trading portfolio. Please check out and download the free options workshop in the link below.
It talks about the two main reasons why options can be less risky and more profitable than just buying stocks alone. It also details how to profit in both directions and pick your win percentage, which you can't do just buying stocks alone. Also, please hit the like and subscribe button, as I appreciate it and it helps get the video out to more people. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. What do we know about the banks after this recent Silicon Valley Bank collapse and Credit Suisse bailout? Silicon Valley Bank had a very high percentage of their money loaned to tech startups. Back in 2021 and early 2022, SVB took nearly $100 billion and invested that into government-backed bonds, with a significant portion locked away for 3 to 4 years at an interest rate of only 1.79%. So they basically made a bet that the central bank was not going to raise interest rates as fast as they did. When they were wrong, it put them in a dangerous position. SVB was now in the red on all of this money since bond value is based on the yield. Credit Suisse recently said they had found material weakness in its reporting system in 2021 and 2022. In addition, Credit Suisse just borrowed 50 billion Swiss francs from the central bank. So Credit Suisse currently meets the capital and liquidity requirements imposed on systematically important banks. I'm not interested in being part of Credit Suisse's transformation plan. However, it does look like it is stabilizing. Warren Buffett once said that it's wise for investors to be fearful when others are greedy and greedy when others are fearful. And it would be a disaster for all the world's banking systems to fail. So there are many levers in place to prevent that from happening. We should also do our homework. How do we do our homework and determine what to do in the bank stocks now? I'll put a link down below to a video we just did covering the homework in the bank stocks. Basically, it shows that banks have very low PE ratios, so they are cheap right now. The earnings and revenue growth is expected to be positive in the second half of 2023. However, it may have just moved to the right by a quarter or two after this most recent news this week. But coming out of a recession in a higher interest rate environment, banks should do well. So, why trade Schwab now? First off, let's look at why it dropped recently. The financial services giant sank lower after news of a potential block sell-off of 8.5 million shares of stock run through JP Morgan Chase. Many analysts now are saying that the Schwab sell-off was overdone, and they have a buy rating and price target in the $84 range. Do we think Schwab is going to collapse? Have they done any of the risky things that SVB or Credit Suisse did? I don't think so. Schwab is not loaning 90% of their money to tech startups. They also do not have the lawsuits that Credit Suisse has had. Schwab has a much more diverse deposit base, with many clients that invest their 401ks and retirement accounts automatically, and basically they just leave their money and let it grow. As we outlined in previous videos, the financials currently have very low PEs. When the banking system does calm down as expected, since the government and the world can't have it collapse, financials often lead the way out of recessions and do well in higher interest rate markets. So how do we place a LEAPS option trade in Schwab? Let's go to the Tastyworks trade platform. It's the best platform for trading options. I'll put a link below. We punch in SCHW in the upper left and make sure we hit the trade tab in order to see the option change. We see the stock is currently trading for $57. We look to buy a deep in the money call option, which is called a LEAPS option. I like to go out about 1 to 2 years, so we will click on the June 2024 option chain. We click on the ask to buy the 30 call option. We go deep in the money in order to closely duplicate the owning of 100 shares of stock outright. The cost is $3,010 or $30.10. Since there's 100 shares, it equates to $3,010. However, with the stock price at $57, there is $27 intrinsic value already built in. To buy the 100 shares outright at $57 would be $5,700. We are paying a little more than half that cost at $3,010. Let's switch to the curve mode and look at the profit zone. If the stock moves from $57 where it is today up to the $80 range where it was just last month, we should make about $2,000 in profit. I think this could easily happen as the banking system settles and people realize that not all the banks are collapsing. This is also the target range, and many people think it's low for Schwab. How do we manage a leaps option trade in Schwab in the short term and the long term? When I have an opportunity, like in Schwab, where I don't mind holding the stock or option for the long term, I'll trade against it in the short term to generate more profits. So if the stock moves up a little and provides a quick couple $100 profit, I'll sell it and bank the profit. To start, I'll put a GTC, which stands for Good Till Canceled, order in to buy the leaps option on a down day if I want to be long the stock and am bullish. You can see from the option chain that I did this several times just this past week to take advantage of the volatility in Schwab. I started on the 13th on a big down day and bought the 30 leaps option for $23.95. I was able to do this because I knew the fundamentals of the banking stocks that we just covered. Then the next day on the 14th, Schwab moved up and I sold it for a quick $760 profit. I actually also sold a 50-55 put vertical as well that I still have on today, and it's open with $180 collected. Schwab moved down in price on that same day, the 14th, so I bought another leaps option. This time it was at $29.60 cost. I put a GTC order in at $200 profit, and you can see it got filled just 14 minutes later at 7:01 a.m. I then put a GTC order in to buy the leaps at the exact same price, $29.60. It was filled, and then I sold it again the next day on the 15th for $170 profit. 2 minutes later on the 15th at 8:10, I bought it at the exact same price, $29.60. So I put in a GTC and sold 5 minutes later for $215 this time. I then bought it again for $29.60 at 8:18 on the 16th. It dropped pretty big, and this is where most people panic. You need to know how big you can go and your max loss. I was only going to go 2 lots or 2 contracts since I have some other financial stock trades on as well, so I knew my limit. Again, I felt comfortable doing this because I did my homework and was comfortable holding the option long for several months or even a year if the stock price didn't move up right away. I had confidence in the long term, which you need to have. It dropped, and I bought a second leaps option at $27.85. So now I was at my max. I had 2 contracts. I averaged the cost, so $27.85 plus $29.60 divided by 2 equals $28.72 was my average cost for the 2 contracts. So I decided that I would unload the first one after making just $100 profit. So I placed a GTC order at $29.70, and you can see here that it was filled. I put the second one on to sell at $30.70 for a $200 profit, and that one is still open. So in 1 week, I traded in and out of a leaps option in Schwab multiple times. We made $1,611 total profit in just 1 week, placing these trades in the short term with a long-term bias in mind. I admit it doesn't always work out this well. However, it's something that can definitely work when we're bullish and not afraid to hold the leaps option for a long period. As long as we do our homework and we have an idea of what we're getting into, we can use volatility and fear in the market to our advantage.
All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Also, let me know what you thought of this trade and what you're trading in your options trading account. Thanks for watching and see you in the next one.